This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
So we've been collecting lots of evidence, which is going to help us form a conclusion with regard to the financial statements, whether we can say there's a reasonable probability that they do not contain a material misstatement. But where is this evidence actually recorded? Physically, really? How do we know what work has been done, what the results, conclusions that can be drawn from that? And this is where the documentation that the auditor uses is terribly important. And really, it is absolutely essential that the audit process is properly documented. First of all, it acts as evidence as to the work that has been done. And I think auditors should always be living with the possibility that if something went wrong with the audit, they could be called into court, they could be sued by maybe the shareholders, and they have to be able to hold up evidence and say, this is what I base my conclusions on. Secondly, it enables the review process to take place. How are you going to review somebody's work if it's not recorded properly? And if you remember, there were several stages of review. The most junior people do some work. That's reviewed by the senior in charge or the supervisor. That's reviewed by the manager, and then finally it's going to be reviewed by the partner. So they can all see the work that's been done. They can make comments on the working papers. They can maybe ask for other work to be completed before they go further. It helps the audit team in future years. One of the first things that one always does in practice is you look at last year's file. And on last year's file, it shows you the maybe areas of difficulty which they had, or areas where the internal control system wasn't operating terribly well. And as part of the planning of this year's audit, looking at what happened in last year's audit is a very good place to start. And finally, it encourages a methodical, high-quality approach. Very much within the audit documentation, you have documents. Well, we have the flow charts and the narrative notes. You may have the ICQs, the ICEQs. You have something called audit programs, which are basically instructions to audit staff about what sort of audit tests they should be doing. So typically in an audit program, it would say something like, choose 10 dispatch notes, that's a bit low, choose 30 dispatch notes at random spread throughout the year, and ensure you can trace from each dispatch note to an invoice. Or it might say choose 10 acquisitions in the non-current assets and ensure that you can trace those to purchase requisitions, and that it complies with the plans maybe that were set out in the capital expenditure budget. There are two types of audit file. First one here we'll talk about is the permanent audit file, and the permanent audit file holds information which isn't going to change very rapidly. So within the permanent audit file, this is where you tend to keep the documentation of the accounting system. Of course, the accounting system might evolve, but it's not normally going to radically change. You keep information like the name and address of the company's lawyers, the name and address of the company's bank. You'll keep organisation charts of the companies. You know who the CEO is, the finance director, the chief accountant, who's head of the receivables, who's head of the payables, and the like. This is also where you accumulate, generally over the years, the results of your ratio analysis, the procedures with the analytical procedures which you carry out. So you can see trends of these figures going up and down. You may keep copies of the company's memorandum and articles of association. You maybe keep copies of major contracts, major title deeds, and so on. You have to maybe verify each year that you can go and see the original title deed. But this is a sort of fairly permanent long-term stuff you're going to keep in the audit file. And then every year you have a current audit file, and this is really where you accumulate, and all you put at the front of it, you put on the draft financial statements, and then reference to that as you go behind it is all the work that you've done on each figure, whether that work is work which has been aimed at making sure the internal controls are working properly, test of controls, or whether the work is substantive tests where you take a particular balance and you examine all the assertions which that balance is making. And the working papers, the advisory time to be keeping is about 7 years, just in case 5 years later something comes to light, maybe a fraud is uncovered 5 years later, and you need to look back, maybe to defend yourself, to say, well, there's really no reason we should have found that. So here's an example of how a typical current audit file will be constructed. At the front you have the financial statements that's been given to you by the company. These are what's going to be subject to audit, and then behind that, as you go down through the file, you have all the evidence, all the descriptions of the audit tests and procedures that have been performed are going to be there to support the conclusions of the audit. So what I have here is I have put on the front just the statement of financial position. That would be obviously the statement of profit and loss, the cash flow, the notes and so on there, but just concentrate on the statement of financial position, and all of these pages will be referenced. So let's call this one FS1, meaning Financial Statement 1. And we're going to concentrate on the sort of way we will pursue the work done on the non-current assets. And typically the way these files are then divided up, it's almost like an old-fashioned lever arch file with the dividers in it. Section B might be for the bank, section C might be for current assets, section F might be for the fixed assets and non-current assets, and so on. And each of these sections then has, the details of the work done on that particular item, either in the statement of financial position, the statement of a profit and loss, the cash flow, or whatever. So let's say that the non-current assets here is what we're going to be looking at, and I'll reference this to section F of the file, and it'll be Schedule 1 on section F of the file. And if we go through the file dividers to section F, then this is our non-current assets, this is the F1, and down here we have the 1,000 there, that's appearing on the statement of financial position. So we've got a kind of two-way referencing going on. And then typically what we would have is we have a section showing the work done on the machinery, the work done on the vehicles, the work done on the equipment, and so on and so forth. We'll just concentrate on the machinery. So let's say the machinery work starts on schedule or page F2. So we would reference that one to F2. And this page here would be referenced F2. Okay. And again, we need to go back. What we've got in here is a figure of 500, and that will be referenced back to F1. So we can see from here, if we want to find out more work done on machinery, we go to F2. We say yes, that's the 500 that's carried forward to F1, which is incorporated into the 1,000, which is then carried forward to the statement of financial position. So now we're getting down to, in a way, the detail of what's happened in machinery, and I haven't put any more pages on here, but broadly speaking, what you would have to do for this is when you look at the brought forward figure, the 1,000, you would need some sort of little audit test which says, yes, this has been agreed to last year's carried forward figure. Now, so little work needs to be done on that, somebody might just write it on, so agreed, some sort of little kind of tick, agreed to carry forward, and it will be signed by the person who did that. But when we look at additions, you remember the sort of stuff we had to do on additions of non-current assets. We would look at invoices for the addition to make sure the additions were handled properly, that you took out the VAT where you had to do that. We might look at the purchase requisitions, the authorizations. Maybe in terms of large acquisitions, we would also look at the board minutes. So this here, the work you do in the additions, may be shown on F3. And if you remember the sort of work we had to do in disposals, we had to maybe have authorization for disposal, we needed to see the cash coming in, maybe we wanted to see some sort of evidence that they got a good price for the disposals. This was maybe something on Schedule F4. And on depreciation, we have to make sure that this one kind of agrees with the brought forward. Somebody needs to do that. We need to make sure maybe on F5 do some sort of little test to make sure that when we remove assets from the cost, we remove their depreciation from the accumulated depreciation. Anything, everything, every figure really needs evidence. And then charge for the year, F6. How are we going to do that? Well, you'd have to do some recalculations of the charge for the year. You maybe do a reasonable sort of test, almost an analytical procedure, although in detail you don't expect the charge of the year to be exactly 20% of the cost, because some items will be fully depreciated. Roughly speaking, you might expect the depreciation charge to be about 20% of the cost. But somebody will have to show what work they did to verify, if you like, that the charge for the depreciation, the 200 being charged there, is kind of right. And that's where you go to F6, and these will then all be kind of referenced back. Now, what will be shown on these more detailed working papers, where we actually get down and do some work. And this is the typical kind of working paper contents. First of all, it'll be given a title. So it'll be given a title, maybe the recalculation and verification of the depreciation charge, something which kind of tells people the essence of what's going on. You have to put down the date it was prepared, because dates can become important later on. The person who has prepared it then needs to put their name or some sort of reference, and they need to sign it. You need evidence, you need this person to take responsibility that that is the work that they did. There'll be references to other schedules, as we've seen, referencing further, forwards and backwards and so on there, so the figures are tied up. We have to say the purpose of the audit tests being performed, in other words, expanding slightly on the title. And very often this purpose of the audit test being performed should be phrased really in terms of the assertions which the work is trying to do. So it could be in terms of calculating the depreciation. You could be saying something like to confirm the accuracy of the depreciation charge in the statement of profit or loss. If you're looking at the schedule dealing with additions of non-current assets, you could be talking about to ascertain the ownership and maybe existence of the new non-current assets, and the sort of tests you would do would be going to see purchase invoices, but actually going to observe, check, see, find these new assets to actually ensure that in fact they have been bought by the company, are within the company's premises and being used. There's the details of the work performed, as I've said there, exactly what we've done. If you're picking 30 invoices at random, you would write down all the invoice numbers and so on, who the invoices are from, how much the amount is. You would also sometimes have little columns saying, I've done this test, and this test, and little ticks going through there where the tests have been successful. And then there should be a conclusion relating to the work performed. So the conclusion, if it all goes well, you could be concluding that the control is operating satisfactorily if it's work which is designed to test the operation of controls, internal controls. Or could be concluding the conclusion is that the depreciation charge for machinery has been calculated correctly. And then you have reviewers. We know that the person who prepared the thing has signed it, but then that would be evidenced. Yes, the supervisor has reviewed it. Yes, the manager has reviewed it. And sometimes even the partner might sign off as having scrutinized the work that has been done. Historically, the files were all kept on paper in big, thick lever arch files. Now most auditing companies will have changed over to files which have been kept on computer. These working papers kept on computers can be really very good because they can automatically reference material. They will ensure that you've done all the tests you're supposed to have done, the tests to be set out on the audit program. And if you don't sign one of those off, then it can say, well, by the way, bring that to the top of a to-do list. They can keep a complete record of any changes that have been put into the audit file, the dates and the times and so on. So there's much less possibility now of you choosing a document for test, deciding you really didn't want to choose that document for test because it isn't being tested very well, kind of putting it back and picking another one out, and maybe screwing up the working paper and starting another one entirely. Once you've started off the process of putting information into the computerized system, it won't let you take it out. It's got a fantastic audit trail of the audit.